Hey, Joshua Phillips here at Churchill Mortgage with another market update. I'm doing this one on Thursday because I'm going to be traveling tomorrow afternoon. So it is July 11th here in the afternoon, and look forward to sharing some good news with you today. So as you can see here in this headline, I always like to pull out a headline. Today, woke up this morning to see a CPI, Consumer Pricing Index report that was good for mortgage rates. And as it showed, inflation continued to slowly slow down. That's what it's all about. That's what we've been waiting to see. And this was another good indicator that we should have our first Fed cut later this year. As it talks about here, the 10-year Treasury yield dives. You can always watch the 10-year Treasury yield. You want to see it go down. And let's see, we can actually pull it up here real quick for you. It's a good indicator for what mortgage rates are doing. Let's pull it up. If I pull it up here, the bonds right here. Let's see. All right, so we got the 10-year. We can see it's down 0.7. That's good. We want to see red. We want to see that going down. So that's something that everybody as a consumer can check. In general, if you see the 10-year Treasury yield going down, that's good for mortgage rates. So let's take a look here at our mortgage-backed security chart, which is what we typically use to give you an idea of what's going on with mortgage rates. All you need to know really to understand these charts is that green is good, red is bad, and the higher the security price, the better rates are doing. As you can see, we are now into, I think, the 7th or 8th day in a row of green. It's been a slow improvement, but we are seeing improvement. Now today, let's make sure we can get this in the picture here. Today, we actually were up about 50 basis points, which 50 basis points is typically about an 1/8% improvement in interest rates. Now, what often happens is we'll get this initial surge with security prices, and then they pull back. We've pulled back about halfway, and strangely enough, as I mentioned before, we are sitting right on that line, which we've touched so many times the last 60, 90 days, where we can't quite break through that line, and that's where we sit. I tell you, these charts are powerful in showing, kind of where things are. So was hoping for a little bit of a breakthrough today, but still, we'll take it. It's another positive day, another positive week. As over the last week, we've probably seen rates improve about 1/8 of a point. Again, not huge, but continued improvement. If I'm able to pull out here to a 6-month chart to see where we started the year, give you a little more perspective. Okay, this is a 6-month chart. So, we started the year way up here, and we kind of got worse into April, and now we've been kind of climbing our way out, and we are seeing mortgage-backed security pricing improve and rates slowly getting better. So again, good sign, good indication. We continue to get green lights that the Fed will finally start cutting the Fed fund rate later this year, and we should hopefully continue to see slowly mortgage rates improve. Of course, as this chart shows, it's a roller coaster. It's never like every day is better and better. I mean, this is unusual to have 7, 8 days in a row that they're green and positive. It's usually some negative, then some positive. So let's not just get comfortable. Obviously, we got a lot of craziness happening with the election coming up later this year. And there's always economic reports that just don't line up with what we hope would happen. So anyway, I'm here if you'd like to talk about your specific situation and mortgage rates for your situation, or if you'd like to get pre-approved before the weekend, feel free to go ahead and fill out an application. I do include that in the email I'm sending out associated with these market updates. Anyway, have a great day. Let me know how I can be of assistance. Take care. Bye-bye.